Hello traders, this is Chris Buss with Traders Profit Compass. I wanted to do a quick video on how to properly pyramid a position. There was something I saw in StockTwits the other day that got me thinking about it, so I have some thoughts on the subject I want to share with you. Pyramiding is basically just a process of building a position. Some traders use pyramiding as a way to build a real concentrated, oversized position. And while I don't really endorse that approach, there's certainly a right way to do it, and I'll share that with you. I also want to share with you a few wrong ways aspiring and even seasoned traders go about the process that can get them into deep trouble. So let's take a look. So here we've got a rookie mistake, and it's one a lot of new traders make. Once they have a buy trigger, they make an initial buy, a small buy that's very tentative, with the thought of, well, what if I'm wrong? What if it goes the other way? I don't want to lose a bunch of money. So they make a small buy. Then as price goes up, they say to themselves, well, it looks okay. I'll make another small add. So they add to their position. Stock goes up some more. It's really rocking. They're starting to feel it. So they add some more. Then it goes up some more. You know, it's a spaceship. So they keep adding. And then they're in moonshot mode. And they're going to really make sure that they're aboard. All the while not realizing that their risk profile is totally upside down. If you think about it, if this is your buy trigger, whether that's a breakout or whatever system that you're using, that's the point of your lowest risk. Because if your stop is just below, then you'll be stopped out and you'll be out of the position. But by adding larger and larger amounts to the existing buy, you're adding a ton of risk as you go up. And now with one little pullback, your whole position is going to be underwater because you've made your biggest buy the farthest away from your buy trigger, which means it's the highest risk position that you have. So any kind of pullback, you're going to be underwater. And it's a real easy thing to do, and I think if people thought about it, they wouldn't make that mistake. But it all starts from having a tentative buy in the beginning and then adding to it as price goes up. So I've made that mistake. Maybe you have, but certainly be aware of it. It's a recipe for disaster. This is what caught my eye in StockTwits the other day. One trader was talking to another trader, and they say, so the strategy would be to enter small and have an idea to average down 4 to 5 times. That's usually what I like to do. So from the get-go, this guy is thinking, I'm going to add to a loser 4 to 5 times. And that to me just makes absolutely zero sense. So, again, the trader has a buy trigger. They make an initial tentative buy. And then the stock either goes up for a day or so or stays the same. And then comes back down, hits their stop, and they ignore it. And then they think to themselves, wow, this stock is really undervalued. I'm going to make a small buy here. I'm not going to respect my stop. And then it goes down some more, and they see other people adding, so they decide they're going to add and make another buy. And then they think to themselves, well, I'm going to add again because now with any slight little pop, I'm going to be profitable. So they're digging themselves a bigger and bigger hole as the stock goes down. And then finally, you go into revenge trading mode, saying that the market is wrong and I'll prove it. The great Jesse Livermore from Reminiscences of a Stock Operator says, always buy on a rising scale and never add to losers. And I think that's a key adage to remember. Just don't add to losers and you won't find yourself in this mess. Again, it's easy to do. If you disrespect that first stop, then it's a slippery slope from there. You get underwater, then your mind starts talking to you on ways to get out of the mess, keeping your ego intact without taking that early loss, and then just digging yourself a deeper and deeper hole. So respect your stops and never add to a loser. Take that initial first loss, get out of the position, and look for another opportunity. Or you can even just wait for that same stock to come back up. Maybe it was a shakeout dip, and then it'll come back above your buy trigger and you can re-enter, but don't add to the losers. Here, in my opinion, is the way to build it right. You have a buy trigger and you set a stop just below, and you make your biggest buy of the position that you want to build. If you think about it, this is your least risky position because you're close to your stop, so that should be your biggest buy. If the stock advances and you want to build on it, make another buy. I think 40 to 50% is the right number for your initial buy, adding 20 to 25%, and then raise your stop so that if price pulls back, this will all still be profitable. So as you build your position, you're adding smaller and smaller amounts and raising your stops as you go. So if the stock keeps advancing, you can do another 10 to 15% add, raise your stop. So now your first two blocks will remain profitable even if you get stopped out of your third add. And then you go right on up, building your pyramid. You can add 10% more, raise up your stop. You've built a nice profitable position. Now you're just putting the toppers on the position, and then you can finish it off with 2, 3, 4, 5% add, and raise your stop to the final level for the position. And then once your final add becomes profitable, you can even raise your stop up one more level to where your whole position will remain profitable. If the stock pulls back, you can exit on the pullback and you'll have a huge win in your portfolio. One thing that's real important is to decide your max position before you start. So if you're a guy that normally trades 1 to 2% of your capital on any one trade, and you've got it in your mind that you want to pyramid a position, I think it's okay to go up to 5% if it's like the only one you've got in your portfolio like that. I'd hate to see someone put 10, 15, or 20% into any one position. I did that one time. I had a huge oversized position in a stock, and in one day it lost 15% and basically, wiped me out of that position. So strange things can and will happen. So I'd hate to see anybody lose more than 5% of their capital on any one trade. So that's really the top limit that I'd advise. And don't forget to raise your stops along the way. If you leave your stop way down here after that first add, you're going to have all these adds be underwater before that stop is hit. So you've got to raise your stop every time that you add. So worst case scenario, just your top or most recent add is underwater before you get out of the position, leaving all of this down here being profitable. And really, Ed Seykota one of my favorite market wizards of all time, said it best. Pyramiding instructions appear on dollar bills. Add smaller and smaller amounts on the way up, keeping your eye open at the top. If you look at the back of a dollar bill, you've got your pyramid and your all-seer at the top. That's when you've got to watch out. Once you've built your pyramid, keep your eyes open, keep your head on a swivel, and take your profits when and if the market or your stock pulls back. So I hope this was helpful to you. There's not anything complicated to it, but nonetheless, a lot of people get in trouble when they try to pyramid doing the wrong things at the wrong time. So print out that one page, keep it by you. Think about the dollar bill example. If you get stuck, that's how you build a pyramid. Having your largest buy be your first buy, and adding smaller and smaller increments on the way up. I want to thank you for spending this time with me. I hope you found it beneficial. If you haven't done so already, please visit the website tradersprofitcompass.com and register. You'll get my content at least 6 times a week. On Twitter, I can be found at @ProfitCompass. On StockTwits at Traders Profit Compass. And you're welcome to reach out at any time on my email address if you get stuck or have a question. I'd be happy to do my best to help you work through it and move the ball downfield for you. So reach out anytime and I'll do my best. Thank you. This has been Chris Buss with Traders Profit Compass. Good luck in your trades.